Okay. Good evening and welcome back to the Rex News channel where we discuss issues and trends facing the oil and gas industry. If you are new to this channel, kindly like, share and subscribe to stay up to date with the current trends. So today we have here with us Mr. Pranav Kanth. Pranav Kanth is an accomplished strategist and marketer with over 23 years of experience in the oil and gas sector and has had various leadership roles in Total, BP and Apar. Besides India, he has wide international experience working in Paris and Singapore. His functional expertise includes strategy, mergers and acquisitions, and marketing. So my first question for today is, crude prices have become volatile with it reacting to every small news. Do you think the volatility will continue to increase?
Thank you, Yukta, for the wonderful question, and thanks also for a very flattering introduction. So yes, coming back to your question about the crude price, the price volatility is, we need to understand that it's a result of the structural changes which are taking place as a result of the EU and US ban on the Russian oil and gas. And at the same time, the idea of replacing the Russian oil and gas for the EU is always very, very challenging. When one considers the volumes required, it would require massive increase in extraction and refining capabilities from the existing as well as the alternate sources, which in the light of when we see the OPEC plus production, which continues to be well below the target, matter of fact, 2.7 billion barrels below the target. So we do not have any easy solutions upfront. So we do not see this likely to be changing anytime soon. So we see that, yes, crude oil prices are likely to remain at the current or elevated levels for some time.
Okay. So my next question is, will high inflation and higher interest rate increase demand?
It will affect demand in a negative sense because as we have seen, IMF and World Bank and other bodies have already revised, lowered down their GDP growth forecast, primarily because of these two reasons of higher inflation and the resultant higher interest rate regimes. And this is a worldwide phenomenon, and US is in the middle of it. So starting from US, EU, and spreading all over. And then we have bearish trend of China lockdown. So all these are bearish factors impacting the demand. But at the same time, since we live in very interesting times, we have the supply side risk as a result of the ban. Now, markets seem to be weighing the supply side risk at higher level than the bearish demand side factors which are evident and as we discussed. So overall, yes, the supply side risk continues to outweigh the demand collapse of the destruction which we are witnessing. So it's a tricky balance, but at this moment, the demand forecasts are almost uniformly low.
All right, okay. And my final question for today is, gasoline prices in the US have touched all-time high. Will there be some more US policy changes to curb this running petrol products price increase?
It's a very interesting question, Yukta, and we need to see that the US gasoline prices are rising due to, one is scarce refinery capacity. The average price per gallon of the regular gas has risen to $4.42 in the US. And this has to be seen in the context of it is up from $4.10 and $3 in May of last year. So it's quite serious. And a drop in oil refining capacity is also pushing up the prices. Now, refineries turn oil into gas and the other products. And the refinery capacity in the US since year 2019 has shrunk by about 1 million barrels per day. Now, that's the kind of refinery capacity lower refinery capacity, which has been arrived at over the last 3 years. So it is not going to go away anytime soon. And at the same time, the inventories of the gasoline stocks in the US have fallen to a 14-week low, now according to the data from the Energy Information Administration. And then compounding the factors is the ban on oil and gas imports from Russia. So it all is making it look not great for the US gasoline prices. And the distillate stocks, again, which is a crucial component of the refining, has been decreasing. And another fact in this, we need to mention that there is a great demand for the diesel and the aviation fuel as a result of the post-COVID, or quote unquote, the post-COVID. So large part of the refining capacities is getting geared into the diesel and the jet aviation fuel, which leaves the gasoline little bit more undersupplied. So all these factors make for really tough pricing scenario from the US consumer point of view. And we should not forget that US is exporting from its SPR draws, the Strategic Petroleum Reserve draws, lots of oil, crude oil, to the Europe to overcome their proposed ban on the Russian oil and gas. So from the US consumer point of view, I think some tough times are likely to continue, and particularly in the peak driving season in the upcoming summer is going to be a tough situation for the US consumer, and this is what we are looking at.
Okay. Thank you so much for the great insights. For all those watching us, thank you for subscribing and kindly share the video and follow us for more. All right.
Thank you.
Thank you.